Yo guys, welcome in the Trader's Diary, the journey of a trader. Welcome back on the channel of Trader Logs. Wanted to share quick with you the three trades that I've taken yesterday. Were the first trades of the week, and probably until Friday, also the last ones of the week. Maybe that I will trade something post Friday. Post NFP. Tonight we have FOMC at 8:30, 8 o'clock and 8:30 in the Netherlands. So that's in 2.5 hours and in almost 3 hours. And I'm not gonna participate in that, and I'm also not gonna watch it because in 2.5 hours I have a soccer match that I have to go to, and hopefully we win. Alright, let's check it up. I will make this very quick because what I say, in 2.5 hours I have to go to a soccer match, and I also have to eat and to cook still, so I gotta hurry up. But I still wanted to do the trading journal session and bring you along with what I've been trading. Alright, if we take into account last week, I shared that I had 2 losses last week. One loss of minus 2.5% and one loss of minus 0.8%, if I have it correct out of my head, meaning I'm down minus 3.3%. And here is another trade that I took yesterday in London session. I've added one thing to my journal. I haven't updated it here yet because it's not I've done it, the update on one journal later, and that is that I made an differentiation between my ABC game within my model, so my technical model, and my technical execution, and my emotional part of trading. And the thing why I wanted to do that is I've been learning by Jared Tendler, The Mental Game of Trading. Highly recommend his book. And what he says is it's not about focusing on your result itself, but it's focusing on your performance. And to grade your performance, you need to be able to see at the bigger picture in which type you're participating. And for me, I have a model that I trade in, so that is the higher time frame narrative for the things that I participate in. That is most of the time is that dialed in from the 15-minute time frame. That is only the model that I'm using to make a framework of the trade that I will participate in. But oftentimes the 15-minute is not the time frame that will be used for an entry. So because I want to manage my performance, I want to see how I'm doing within my model. Am I trading an A game model or B game model or C game model? But I also want to know how do I execute within that model, because there can be a different differentiation between those two. You can have a perfect model, but you can fuck up, or you can, I'm sorry, I'm not supposed to say that word, but you can make a bad move on your execution and be in C game on your execution and lose because of that. But that doesn't mean that your whole performance is bad. It just meant that your execution was bad, but your model was correct. And it can also be the other way around. You can participate in a move and your model is shit. Your model is not there. It's a C game model that you have been participating in. But on the other hand, your execution model, so the type of way that you want to do an execution, was perfectly fine and was A game. And by making that differentiation, you can better look at where is the flaws within the whole trading plan, is what Jared is saying. And from there on you can grow faster, because you have to grade it to something, because otherwise you will always aim for perfection. And we all know perfection is not what you're gonna achieve in this market. You just have to keep on developing your bad parts. So what are you at your worst? Your worst has to become your best right now. So what is your best performance right now? That needs to be in a year or in 2 years. Your worst performance that is right now, your worst performance should be your current best performance in a year or two. and your best performance, you don't even know what will be that in like 2 years. Yes. So all right, let's dive into it. So what you can see is there was another loss. So overall, since I started the channel, I'm minus 5.8% in total. It was a B game. I was outcome based. I was very impatient and I was impulsive within the trade. But I can say that I executed the trade plan, and that is because the model was there and it was something that I outlined. And like I said in the last session, I try to focus mainly on whether I'm trading the things that I point out and trading the things that I draw out and just participate in it, because my problem was for a very long time not participating in the things that I draw out, and I just want to be transparent towards you guys and transparent towards myself, that everything that I draw out and that I believe in, whether it's good or whether it's bad, if I draw it out and I think it's correct at that current time and it's coming there and I can manage my risk and I'm still not over my risk for the day, I have to take it and I will learn from it, or I will make money from it. So what we can see if we go to the daily, like I pointed out in the weekly outlook, I had a divergence right here and I saw this as sell side liquidity that we could trade towards. I was expecting a retracement up to sell it further down. So this was the daily close and this is the day that I took the sell in. If you look at the 1 hour, what I saw is this is the whole range. We created here a high that took out buy side liquidity and we have an expansion lower. From there on we had a buy side reversal after showing intention towards the sell side. So we were showing that we were wanting to sell, but before we sold off we took out buy side first. From there on we went lower. We again had a retracement higher within this order block, respected that, and we shifted lower, breaking a short-term low. So at this point I thought, alright, if we're gonna dive back into this breaker block, why is this a breaker block? We can see multiple highs right here, this high, and this high. That has been taken out by this candle, and from there on we had a shift lower. So we can look at the last candle, that's this one, or the last candles before the up move that took out buy side liquidity as our breaker block right here, or our breaker zone, that is this multiple candles before this move up, as our projected breaker block that we can anticipate in. Besides that, we had a void right here, and I said, alright, if we're gonna trade from here, I don't want us to see trading above this high, and we could see a fib retracement level from this high to this low instead of from this high to this low. And I will say again why I said that. It is because I see this as a stop hunt. We just went above these highs to reach a premium once again, to make a shift. And how can I see that? We had an impulsive move up, fast moves up to the buy side, and after we reached the buy side, took out buy side liquidity, we immediately draw back down. So this was a stop hunt up to sell further down, meaning we could use this high to this low, and we got here in a premium again. And to be honest, that's what I said with being a little bit impatient. I had this as my structure high because of the stop hunt above this high, and this is my structure low. So we were in a premium array, we had a fair value gap here, and we had this breaker block here that I anticipated on. When I woke up, I saw that we traded above this high for a little bit on euro, and I saw at that moment of time that we didn't break below a low on dollar, and that was the moment that I got impatient and thought, alright, this is it, we will move down right now. While I still had in the back of my mind that within this structure range high towards low, we cannot see any internal liquidity on the left side, so on this side of the range, that has been created between this high and low at a minimum of 50% of the range. Meaning there is no clear buy side liquidity on this side of the range that could be taken out to induce buyers and to take out premature sellers. If that is not the case, it lowers the probability of moving instantly, and we often see stuff like this. that there is first created equal highs at or around 50% level before taking that out, because sellers are here just like me too early. Buyers get in by breaking above these highs because they will see it as resistance toward support, and buy stops are above highs, we know that. So buyers will get in while premature sellers will be kicked out just like me, and then the move will happen. So like I said, main parts of the model itself were visible because we had a structure high, we had a structure low, we saw sell side intention below this low, but we didn't have a clear buy side reversal. We did have PD arrays in a premium, we have this fair value gap and this breaker block. And like I said, I didn't want to see a big retracement to the upside, so I didn't want to see this void to be filled in completely. But all with all, it wasn't a very good trade on the technical part. On the emotional part, not as well, because I think I was a little bit, what I said, too impulsive and impatient for missing this move, and reacted too much on the divergence that has been created here. For future events like this, I would like to wait a little bit longer until a full body close, or how we will react after I see the divergence. Because if my expectation is to take this sell side liquidity and this one, and we just traded above this high, it will not fall right away most of the time. And if it does, yeah, then I just missed the move. That's no big problem at all. But often we will see a 1 minute or a 5 minute retracement that could be capitalized on as well. So, alright, this is what it is. On the 5 minute, you can see I entered right after, in this candle, after I saw that it went above this high one time, thought of a divergence, and entered when it came back to this lower, a little bit lower again, and I entered on this level. Stop loss was placed above this high because I was thinking, alright, if this is the fair value gap that we will be using, that means we don't want to see us coming back into this void. All with all, what I said was a losing trade, and that is something that can happen. When looking at the technical side of the market, how I could improve on this and why it was not correct, we can see, like I said before, we didn't have an internal structure, clear liquidity point that has been taken out by this high or by this high. So that was the first warning point. The second warning point, what we could see, is that we have been trading from a consolidation, had an expansion with an accumulation level right here, a new expansion towards this high, and from here on we had a retracement back to this accumulation level with a fair value gap. From this point we saw that we had a stop on higher, but instead of breaking lower and breaking these lows, we break lower, reject from this accumulation level, and went higher. And from there on we respected this level of liquidity, this bullish institutional order flow, and from there on we respected this order block again for order flow and reached up here. So meaning at this point, the time I entered, it was not a correct time to enter, because if we want to sell, we want to see us breaking this before, especially if we're just at this highs, and breaking really above it is then more a higher probability of expectation, because we keep on respecting bullish order flow, and we still have a high right here that could be taken out. It's also an Asian session high that has not been taken out yet by London, so that only makes the expectations higher to take it out. Alright, I think that is it. As you can see right here, I took a re-entry, and we will dive into that right away. So this is the next trade I took. It's on EURUSD again. It's almost the same trade as we can see right there. Also, this trade was still a little bit of outcome based, and that is because I had a lot of FOMO within this trade. I thought, alright, fuck, it's still the same current dealing range that we're in. We still have that structure high, we still have that structure low. I still have an expectation to take out the major sell side liquidity, like I pointed out in the weekly outlook. But I just went in a little bit too early. So looking at that, with taking out a level of buy side liquidity that was created at or around 50% level of the structure range, in the trade I took before. That was the buy side reversal that we could have seen on this trade, meaning this trade became an A game ABC model. On the execution part, it was B game, and I will explain in a moment why that is. And emotional wise, it was also B game. I had a stop loss of 10 pips. I had a take profit of 40 pips, and I took my profits at 30 pips, and that's also a part of the emotional side of things hereby. Also, this trade was executed by my trade plan, so it was correct because I pointed it out. I still had my drawing stand out, and I didn't do anything that is not in my trade plan. It was not a setup that I could not take recording according to my trade plan. It was also not above my risk parameters that I have, and of course things could have went better, but that's always the case. So the daily is the same on this chart. The 1 hour is a little bit different because I had I changed my drawings because I got taken out right here, and then I went again into my technical side of things and tried to adapt to what I've seen. I still have a structure high here and structure low here, but within this big void and within this breaker zone that I just pointed down to, we can see there is a small fair value gap right here that gets taken over by this big void on the other side. So we have a buy side imbalance, sell side inefficiency right here, and we have a sell side imbalance, buy side inefficiency on the right side. So we have a BISI and a SIBI. Meaning if we got a BISI on the left side and a SIBI on the right side, that creates a balanced price range at that point, and that is highly protective and highly volatile. If we reject right there, it's a high probability of moving from there. What aids in this chart is that we now have buy side liquidity created, that it has been stop hunted higher. So if we are gonna react from here, it makes a high probability to take out this low, because we also have a fair value gap here, and depending on the higher time frame narrative that was down for me, we can also target the structure low and the sell side liquidity here, plus always 10 to 30 pips below lows. So if we look at the 50 minutes, what we can see, we have the sell side intention that we had before, but before we didn't have any buy side liquidity created within this high to low range of 50%. Right now we did have that. My entry was right here, but my entry was liquidity that was built up as equal highs to be taken out, and from there on reverse to the other side. As you can see, I was fully out on the lows. My take profit was 10 pips lower than I had right here, so my take profit was now 630. So it was 530, something around here, eyeballing it right now. So it would have been taken out, but I didn't have the patience to hold it any longer, and I just wanted to have my profits. And that's something that I have to develop on when I'm highly convinced in a trade, and I believe that the trade will really go below this low and dive deeper. I have the rule that it has to be a minimum of 1 to 3, and that from 1 to 3 on I can think what I want to do. But in future I want to be more relaxed on that part and decide before the trade how I will handle it. So now I had it open, I can close it here if I want, but I can also close it at 1 to 4, like 10 pips more. For future trades I want to be more precise before I enter the trade, whether I will take 50% right here or full 100% right here, because the emotions can make you redecide your trades. Alright, if we go and look at the lower time frame, so we will get more into execution right now. What we can see is we went into the 1 hour balanced price range right here, taking out these highs and getting back into this big void. because the void is so big and I didn't have a clear structure, I couldn't enter right away. Also because I just did that right here and I didn't have the conviction or the belief that it will fall right away, while knowing also where to place my stop. So I was a little bit more patient on that part on this trade. I waited till I saw swing low being broken, that is this 5 minute swing low right here, and I entered right away after we broke it with a stop loss above the high. Within my trade plan I got two options for entering. I can enter right away after breaking a market structure shift, and I can enter whenever we have a market structure shift with a retracement higher. It's both possible within my plan. In this case, I should have waited for a confirmation to make a retracement, and why I will explain to you. I don't know if I have 2 minutes on this. No. What we can see right here is that after breaking this market structure shift lower, we rebalanced exactly this fair value gap. And we just had on the 15 minutes, by breaking here and having that 5 minute break lower, we just have this candle right here at this point. So this down candle we can see here, the big one, that is this 15-minute candle. So when we are reacting for the first time from a balanced price range or other PD array, and we coming from a premium level and we are expecting to go to discount, it's the first time reacting from that level, we often see a second leg. And the second leg will be more expected when we are trading also back into a discount array on the other side. And what I will mean with that is I will show it you on the 5 minute. We traded away from a premium array on this side. We traded lower, but within this 15 minutes we haven't reached a discount array yet. The next 15 minutes we can see we first traded down, showed sell side liquidity, and broke this market structure shift to the downside. But on the same time we came back into this fair value gap and we rebalanced to this part. On the 15 minutes though, we only had this breakdown lower, so we can expect a second leg within this range. So in here the expectation is high that we will see a retracement back within this order block, from the open to the mean threshold to a rejection block, and also to the balanced price range. So what I would like to do normally is take a fib from high to low and get back in these cases to at least 50% within that range. And for the outcome of this trade it wouldn't have mattered, but it would have mattered for my risk to reward ratio, because my stop loss would go from 958 probably to around 11, meaning it will only be a 6 to 7 pip stop loss, and 30 trades with 30 pips with a 6 pip stop loss is around 1 to 5 instead of 1 to 3. But again, that is being perfect on your strategy and trying to develop continuously, and that is why I rank it in A, B, C game within the technical on the model, but also on the execution. And for this reason it got a B, because it got all the things I want to see within my execution model. I can see that we have a buy side reversal above initial sell side. We went back into a higher time frame PD array. We reacted from it. We had a market structure shift. So everything aligns to take a sell further on. We took out buy side, and we have a lot of levels of low resistance liquidity here, and also this whole consolidation. But to develop, I would like myself to also take into account the probabilities of retracing a little bit higher, and that is what I could have done better right here. But I think that is mainly the case because of the FOMO that I encountered within this trade. So all with all, I'm glad I took the trade and that I've taken some profits on this one, meaning we have 7.5% on this trade. and we're back in plus on the channel since the first trade again. The last trade of the day was a little bit impulsive, as you can see. It's still too much outcome based. I really have to develop on that, try to be more calm within my analysis and focus more on the processes that I'm going through instead of on the outcome that I'm trying to achieve. It's something I struggle with for a longer time, but I will monitor it and will become better as I trade every day. So let's see what we can see right here. For this trade, I took a sell again, and I was a little bit too much married to the bias I have initially. I thought we were gonna sell off further because that's what I outlined on the daily to take out this sell side liquidity, but I didn't keep in mind that we were trading back into the daily order block mean threshold. And yes, take your charts on it for yourself to see what I mean. On the last dealing range that we were working on, I've shown it in the weekly outlook as well. I think this one and the one before. The mean threshold of that order block, when it gets respected, it's highly probable that we would sell off further on the dollar, and that means we would buy further on the euros USD. And even though I saw that we were reacting from that order block mean threshold, I still was married to the idea of taking buy side liquidity here, creating a new structure range, internal liquidity here, making this a buy side reversal with sell side intention on the low, and selling further on from here. So when we came back here, I wanted to take a trade. It was close to London close, and I also shared that on my Twitter handle, Brainy Trader, and trader is with a 3 instead of with a. You can follow me on there because I will do more time to time heads ups and thoughts that I have within the market, and here will be more after the price action itself developed itself and I have traded on it, and that I will keep more updates while I'm trading and also share things about my life. So alright, so if we look into the trade and the model, we can see we had a structure high here, a structure low there. This meant to be sell side intention, and this is a buy side reversal with a fair value gap right here, and yeah, to be honest, balanced price range right here that we came back into as well. So for the model itself, it was there, but the thing that makes it low probability, not even less probability, but low probability, is that there was no narrative behind it anymore. Because if we look in the build up towards this trade, we have to identify that for today, we just took out major sell side liquidity here, and also on the dollar, we took out major buy side liquidity and went back into the mean threshold of the order block on the daily order block. From there on, instead of selling further and breaking that level, we had an instant impulsive reaction to the other side. We have a clear sell model right here turning into a buy model with one shift. And what did I say last time? When we are shifting instantly with one big candle, it's not something we expect to be taken over right away. So after shifting here, our focus should be more to the sidelines or to the buy side liquidity right here, and take into account, for example, this fair value gap. So yeah, all with all, this trade wasn't good, and we can see on the lower time frame, because I did manage it well, we had buy side reversal here. When we first traded down, I thought, all right, we're gonna keep on pushing lower because it was almost the close of London close, which is between 4 o'clock and 6 o'clock my time in the Netherlands. So you have to calculate it to your own times, between 4 and 6. And I was expecting to break this low before 6 o'clock, and then we perhaps could have seen a little bit of more volatility towards the downside. When I saw that we kept on ranging here, I minimized my stop loss towards this high, and after I saw that we respected this fair value gap, broke to the upside again, breaking this buy side, this short-term high, and then going from the fair value gap or the push higher that was here, rejecting again after retracing down and closing here. I closed the trade right there for -3 pip stop loss. So instead of losing the 2.5% that I risked, I only lost 0.3%. So for my model, it was B game, and maybe it was B game for my model. For my technical analysis, narrative wise, it was very much C game, and maybe that is something that I will add in the future too. But I still have to look upon that if I want to do that or not. The execution itself was B game as well. I waited on the 2 minutes for a break lower, break below sell side liquidity and market structure shift, and then I waited for a retracement back into premium from this range high to low, and I did that correctly. So that was big game. It took out buy side liquidity, and after that a market structure shift. Emotionally, it was big game as well, and that is mainly because I didn't really was patient enough to take a full analysis and disengage myself from the prior bias that I have. And I think the main reason for doing that was because I want to aid my confidence in having picked the right side of the move, the right direction of the day. But I shouldn't give a shit about that. I should just give a shit about taking the process into account and taking the steps that I need to take for my technical analysis, and when things align, then take a trade. If things don't align or I'm still doubting between things, also don't take a trade. But all in all, that were the trades of yesterday. So minus 0.3 on this one, minus 2.5 on the other one, and plus 7.5 on the last one. So that makes a total of plus 4.7% for yesterday. Like I said, today no trades, probably tomorrow also no trades because of the reaction of FOMC, and the day after is gonna be NFP. So I would like to wait post NFP, and maybe I will take something right then, and if not, then that's also good. We'll see you later, guys, and have a good day. And look out with trading, look out with FOMC tonight. And if you like this type of content, give a like and subscribe. If you want to see other type of content, I would like to hear your thoughts and your opinions, of course. Have a good one. Bye bye.